Hello and welcome to the Turkey NPL panel. My name is Muhsin Keskin. I'm heading the finance practice of Esin Attorney Partnership, a member firm of Baker McKenzie International. Today we are going to talk about the Turkish NPL market, and I'm accompanied by an esteemed group of panelists that will cover all major aspects of this recently developing market, I would say. I have the honor of hosting John Komniakidis of DataSite, Sezin Unludogan of Gelecek Varlik, Ksenia Kuznetsova of EBRD, and Ludwig Seitz of IFC. As many of you would know, Turkey has had a very developed NPL market since the beginning of 2000s, when it had its own banking crisis, which forced Turkish banks to offload their portfolios of toxic assets, especially the then bankrupt banks, which were liquidated by the Savings Deposit Insurance Fund, were the main sources of this offload with all those large portfolios of NPLs. And as part of major NPL tenders, which happened in several times, the SCIF packed the loan portfolios and sold these portfolios to international and local investors, triggering the development of the Turkish NPL market in very early 2000s. Well, from 2002 to 2018, the Turkish NPL market consisted mainly of consumer loan type portfolios after, of course, the offload of the corporate NPLs by SDF in early 2000s, such as mortgage loans, car loans, consumer loans, etc. And thanks to the soundly performing Turkish economy, Turkish corporates were able to repay and refinance at the end of the day to roll over their especially FX financial indebtedness. Nevertheless, this changed drastically very recently with the currency crunch in August 2018. The highly FX indebted corporates started to experience difficulties, major difficulties in repaying and refinancing their then existing debts. And of course, this created a very large financial restructuring wave. Not all loans back then were eligible for restructuring, and Turkish FI's NPLs in corporate loans started to pile up towards the end of 2018. The Turkish banking sector's NPL ratio back then rose to 3.87% at the end of the year, and to 5.33% at the end of 2019. So this looks like almost a 50% increase in only 1 year. By the end of October 2020, this ratio was 4%, and the drop from 2019 to today was mostly due to the huge restructuring efforts in 2019, most of which consisted of amend and extend type restructurings. This is a short-term solution, I mean amend and extend a situation. Many of the restructuring loans are anticipated in default in 1 or 2 years' time, or maybe not at the default phase, but at a phase where they will need to be restructured or offloaded. Besides this, many professionals in the market, including myself, including international investors, advisors, asset management company representatives, they all agree that the real figures are much above the regulators' official figures, as Turkish banks have been provided the flexibility to reclassify the impaired loans as a last resort, much after the regulation requires them to do so. So finally, as an answer to the damage given by the pandemic earlier this year to the Turkish economy, the Turkish government took several important steps to incentivize Turkish banks to lend to Turkish businesses and individuals, of course, to increase production and consumption. The state-owned banks, in particular, lowered their interest rates to record low levels that we have ever seen in this market. As a result of this, the loan books have expanded around 34% in the spring and summer of this year. And of course, this large volume of credit increase will mean taking the risk of riskier borrowers that wouldn't normally be taken by Turkish FIs in normal circumstances. And this might possibly lead to a new wave of NPL in the short term, or maybe at the latest midterm. So all in all, there seems to be a great supply of NPL in this market. while the NPL market, especially on the corporate side, is not developing at the pace that we would like it to. And this is why today we are discussing what we need to do to further develop the market. I would like to start with Sezin Hanım, the CEO of Gelecek Varlik, which is one of the top asset management companies in Turkey dealing with the largest portfolios of NPLs. Sezin Hanım, how do you see the asset management sector was affected by COVID-19 pandemic? How are you dealing with the collection delays this might have caused? Considering most of your assets are consumer loans, the pandemic and the unemployment it caused must have negative effect on your clients' payment capacity. And this also might have an impact on the valuation expectations of pricing expectations of your sellers' Turkish FIs. If I can have your comments on these points to see how the asset management sector is doing these days and where it is heading to, I think it might be useful for us to discuss the steps that are missing and that will need to be taken immediately.
Thank you, Muhsin. Thank you for the introduction as well. Actually, our portfolios, instead of the general belief, is 50% consumer and 50% SME and corporate portfolios. SME and corporate, half of it is unsecured, but we also have some secured portfolios. The major negative impact of COVID-19 in 2020 was it actually stopped the sales of portfolios, almost stopped, let me say. Last year there was 1.7 billion US dollars worth UPB of portfolios sold. This year it's only 130 million US dollar UPB sold. So there's almost no new portfolio coming into the sector right now. Whenever there's a sales, there's unbelievably aggressive competition. So we didn't buy any new portfolios. In addition, of course, the COVID-19 situation created a low performance in collections in the second quarter. But the good news is that when we look at the first 9 months of the sector's collection, we see that there is 10% increase compared to 2019. So although there were no portfolios coming in, and the total collection performance increased by 10%, we also know that in the second quarter, our collections decreased more than 20%. So quarter 3 was a recovery period. Obviously, the extensive loan issuance of the banks has worked to our advantage, and those excessive liquidity created in the market has returned to collections as well, and we benefited from it. But of course, there is a challenge in the fourth quarter because it's the second stage of the pandemic, and we already see the effect of it in our first 2 months collections. The sector numbers will be revealed by the end of January, so we will see the whole year performance in the beginning of 2021. Probably we will be at the same level at 2020. We may lose the 10% increase in the last quarter, but we will see how it ends up at the end of December. It's difficult to say a strong comment about how the pricing is affected. As I said, there has not been any significant sales. However, we have discussions with the banks. There was already a huge pricing gap between the banks and the investors. And the reasons behind them are still there. The first and the biggest reason was the discount rates used by different parties. Banks use a very low discount rate to value the portfolios that they have. We use a significantly higher discount rate. And when it comes to an international investors, obviously they use an even higher discount rate, given that they take the currency risk while they are investing in Turkey. So the banks will have to decide whether they would like to take the loss on pricing side and value their portfolios in a different way. There has been a gap as well on the when and how much will be collected from any given portfolio. As investors, we have more conservative predictions, and they have very aggressive predictions. Since 2018, they have been working heavily on these new coming portfolios due to the currency crunch in 2018. But there will be a new flow due to the pandemic. The projections may change and may come closer within the next 2 years. But as you know, today, the BRSA regulator announced that they have extended the forbearance measures until the end of June 2021. So the NPL flow will still be limited in the first 6 months of 2021, and the banks will have less pressure to sell. They have very strong capital adequacy ratios, manageable NPL ratios, still favorable funding costs. So they have less pressure to sell. Probably we will have to go through 2021 and we will see the actual sales coming in 2022. In a summary, I can say this.
Well, thanks, Sezin. Actually, I have been dealing with investors talking to banks for the last 2-3 years to explore the opportunities of buying NPL in Turkey. And normally the feedback I have from my clients is they believe Turkish banks see this economic situation as a short-term problem that would be over in the mid and long term. This is why they are so much stubborn about their pricing and their valuation expectations. Do you share the same view of same impression of Turkish banks, or do you think the reason is something else when it comes to valuation expectations that do not make sense for the general community here?
I don't totally share the same view. I mean, in our one-to-one discussions, we see that they are really not forced to sell because they have the capability to manage these portfolios still. They have strong capital, as I said, they have strong capital adequacy ratios. Their funding costs are not very adversely affected from the increase in NPL portfolio. It's still 150 billion Turkish liras only, but there is a second stage, which is 350 billion. It really depends on how much of it will be transferred to stage 3, 4, 5. They have to see, they have to recognize it first, and then they will be ready to sell. I don't think they see it as a short-term problem. They see the facts, and they will do what's necessary when the time is right.
All right. So thanks very much for this. This was a very comprehensive picture of the Turkish market currently. So while the corporate NPL has been piling up since 2018, we are still unable to see international investors in this market. Of course, there is a legal and tax background to this absence. And at this point, I'm turning to Ksenia, Kuznetsova, and Ludwig, Seitz, representatives of 2 major IFIs who have large equity and debt investments in Turkey. But as far as I am aware, no investment in NPL so far. So starting with Ksenia, I would like to have your thoughts about what measures you think we can implement to incentivize international investors to take part in this growing market.
Thank you very much. I think maybe to slightly correct your point on no investment so far. So actually EBRD has been an investor in the Turkish NPL market. So we've been a shareholder in now Dunya Varlik, as well as provided a number of facilities and invested a number of bonds that Dunya has issued in the past. I think in terms of the larger NPL issue, I think one of the key barriers for entry to international investors has been the ability to segregate the balance sheet risk of the NPL asset managers from the NPL portfolios being disposed of. And there are a number of different structures which have been explored and successfully implemented in other markets, including securitization, which would enable banks to segregate these specific NPL portfolios into individual SPVs. This in turn would then provide and improve the investor's ability to adequately underwrite the risk of the specific portfolio without taking into account the operating risk of the AMC. So last year, EBRD's legal transition team, in coordination with some external stakeholders and advisors, have completed a study on the Turkish NPL market, and they've concluded a number of points. But one of these was that the opening up of the domestic AMC market by allowing for non-Turkish-based legal ownership, as well as the splitting of legal ownership and the servicing functions of the existing market, could have a number of positive impacts. So first of all, for the existing NPL AMC market, it would allow for more effective growth, as would diversify earnings. So for instance, in the current downturn environment, the earnings coming from the NPL portfolio servicing and purchases could be very negatively affected, whereas servicing fees would potentially provide a buffer to that revenue stream and account for some of the more sustainable, be more sustainable in certain cycles. Second of all, it would also allow for a more swift resolution of the existing NPL stock, as well as the future NPL stock. As Sezin mentioned, it's very unclear in terms of what proportion of the stage 2 portfolios would actually be migrating into NPLs in the future. And by including the external investors, which obviously would have a potentially larger capital base for some of these investments, it would help to more swiftly resolve these. Of course, it's very important to mention that the proposal also underlined the need to ensure that the servicing of any SPVs or any other structures that could be contemplated as a solution, and which would ultimately house the NPLs, would need to be done by licensed entities. So this is super important that these remain under close regulatory supervision to make sure that there's adequate consumer protections in place and to make sure that reputational risk is mitigated. The other point that may be worth mentioning is that there is also very important constraints on AMCs, which, irrespective of which solution BRSA and the government ultimately decides to implement, would need to be eliminated in order to enable a more efficiently functioning servicing market. So these, for instance, would include things like much lengthier enforcement proceedings currently for AMCs than for banks, and other legal and regulatory challenges that would need to be addressed as soon as possible to both enable the current AMC market growth, but also for external investors to be able to come in.
That was quite a long list, so thank you for that. Walter, would you agree with Ksenia's conclusions here? How does AFC see Turkish market? Is there a lot to do, or you know, are we there yet?
Yes, Muhsin, thank you very much. From our side, I think the conclusions that we have arrived at are very much the same as Ksenia has outlined. I think IFC is a big investor in Turkey. It's the second largest country for IFC in terms of our global investment exposure. And IFC is quite a material investor in DARP worldwide. Since 2007, we have around over 7 billion in total assets, investments that we have made. About 3 billion our own accounts, the rest through co-investors. So we do have a considerable track record in doing this. Now, with regard to Turkey, we have not yet been able to make any deal, in particular because of what Ksenia has highlighted, the main limitations of us to insulate the NPL risks, which is what we want to take in order to facilitate the financial sector, and the balance sheet risk of the AMC and the servicer. I mean, that's a separate discussion, which we all so happy to engage in, but just as a matter of best global practice, we have to segregate these two things. And hence, the limitations to securitization of stage 2, stage 3 loans that are currently in effect are, for us, the major hurdle to do that. And I think just can repeat what has been said. Being able to segregate ownership of NPLs from the AMCs in especially SPVs of some sorts, being able to securitize these SPVs, and having licensed, properly regulated, professional servicing entities in the form of AMCs that provide a good reputational outcome, if you want, in this entire process. These are, I think, for us, the first and immediate stones that need to be cleared out in order to proceed on this. And there are some other issues. Ksenia has alluded to some of them. I think overall, I would describe it as sort of the level playing field. I mean, there seem to be a lot of different procedural parts that apply to some element, but not the other, and in some constellation, but not in the other, be it foreclosure, be it accounting treatment, be it sort of details in who is able to buy what. I think creating a level playing field, creating a sort of standardized structure where everybody can sort of transact with everybody will not only ensure that the NPLs are taken off the bank's balance sheet, but will also create secondary market and will make everything much more liquid. So I think that's what eventually will need to be tackled. Thank you.
Thank you. As pessimistic as it can get, I would say. So just like EBRD did, we also published a report, I think it was at the end of 2019, about what we need to do on the legal and tax front so that we basically restructure our infrastructure in a way that it is welcoming international investors like IFC, like EBRD, like your competitors, or private investors, etc. I can say it's not a very short report, and I can say those points are not major points. So I think we all agree there are a number of major reforms that we need to go through before we can tell people comfortably that this is a market they can come in and buy assets from. John, does this also reflect your experience in Greece as well? Is it a similar picture to what you have seen a couple of years ago?
So I fully agree with Walter's and Ksenia's comments and Sezin's in the beginning about the recognition of NPLs. I have two comments here. The first one is I think it's related to the second phase after the recognition of these NPLs. So I think the key factor here is, is the establishment of a liquid loan sale market, right? And I think I would like to highlight the securitization model that we see in other countries in Southern Eastern Europe, like Spain, Italy, Greece. There is a common ground right now in both markets, players and the sovereign lenders, that securitization, for example, remains a very good investment option for non-performing loans. From one side, and I think Walter will agree with me, the international investment community is really accustomed to the structure and concepts of securitization. And the law itself has a series of positive, benefits that weigh heavily when investing in this market. I truly believe, that the ongoing discussions between, governments, the sovereign lenders, and the market players to fine-tune the gray areas and simplify processes will make things, more positive. And this is something that I think Turkey on the next phase, should consider securitization as a very good way for the sale of NPL transaction. That's my first point. Related to Greece, I think this is, it's related mostly to the bank initiative, but Muhsin, I'm more than happy to discuss that if you agree and when you are ready about it.
Well, sure. We'll come to that point, I think. Thank you for this, John. Sezin, I'm coming back to you and speaking of structural reforms, legal reforms, etc. I know that your firm and some of your competitors have been working on a couple of proposals together with the Turkish Asset Management Companies Association to be presented to the regulator to further open up the market, clear all the blocks that we have been discussing. Can you please shed us some light as to where the regulator is in respect of this legal reform? Is it coming up, or is there any reason to be more pessimistic about this?
We are only more optimistic, to be honest. In terms of our project, we have started in September. It has been a very fast project because BRSA was also considering making some structural changes to asset management sector. So they actually asked us to be as fast as possible in order to take our proposals into consideration during this process. We have been working with a consulting company as an asset management association. We have contacted, actually our consultants has contacted many parties involved, the regulatory regulatory bodies, BRSA, especially the banks, the international investors, and also the Minister of Justice. So this is a proposal not only to BRSA, this is a proposal to many regulatory bodies, including BRSA, Capital Markets Board, Treasury, Minister of Justice. There is change needed in each and every area, as Ksenia and Walter has just mentioned. But in this project, the two subjects that we have discussed for until now are identified as the two major challenges that we have that needs to be resolved as soon as possible, two bottlenecks for banks to sell their portfolios. First one is the pricing gap. There needs to be a structure that enables banks to distribute the loss that they will write in time. So they shall not incur their loss at the sale time exactly. And the second one is the inexistence of international investment, the requirements of international investors such as ring fencing and bankruptcy remoteness. We have identified them as those. And we are proposing a structure, a securitization structure in order to enable the international investors and enable banks to write their loss within different time periods. There are also many other issues. These are being discussed by the regulatory parties. There are alternative structures that have been proposed. We believe that one of them will be implemented. There's positive impression on the regulator side, as they also would like to see the international investors investing in this sector. There are also many other issues that we need to address, small and big issues that are bottlenecks of banks' sales process. But we have made proposals about each and every one of them. Also, the liquidation process has some problems. In terms of the law, we have a strong law actually, but we have a law very close to the European standards. But the problem is the implementation. Unfortunately, we are not able to implement it as fast as other European countries. So we have to speed it up. We have to somehow make it more efficient and faster in implementation. So we made proposals regarding that issue as well. These are all being communicated right now, being discussed. And hopefully there is a plan to make some strong structural reforms within the next few months.
Well, you know, we say inshallah, so we'll see, hopefully.
Actually, are working for it.
Yeah, well, I think everyone should thank you for that, because at the end, everyone is looking up to this legal reform so that there is a sensible NPL market in Turkey. As a lawyer dealing with Turkish law only, I totally agree with your comment that we have the legal infrastructure already, or let's say mostly we have it. But sometimes not the implementation, but the laws themselves can be the bottleneck. For instance, as Walter mentioned, in terms of securitization, it is basically the regulations of the capital markets board that do not allow us to securitize stage 2, stage 3 loans. So if of course the CMB is convinced, it's a really quick change to the regulation. It's basically changing the asset definition therein, and the next minute you can start issuing bonds, basically securitizing NPL portfolios. We're not there yet, and as far as I know, CMB is not looking at this positively. At the end, its position is to protect the market, the small investors, etc. Whereas this type of securities would be the riskiest securities from the risk perspective. So thank you, Sezin Hanım. It was quite insightful, and it's good to know where the regulators and market players are heading towards. One point that I would again ask you is, and of course I will ask this to Walter, Ksenia, and John as well. For a while, since the beginning of this NPL, let's say, craziness, there was a topic about a Turkish bad bank. I think a couple of Turkish major banks have been leading this discussion. It has been on the table for a while, but recently I'm hearing that it is no more on the table, and people drop this idea. Do you think there is an urgent need in this market to establish such a bad bank to handle the huge bad loan portfolio?
To be honest, I didn't believe that it was a implementable idea because there was some pricing issues with the bad bank structure. Whenever you finish the competition, it's very difficult to convince the banks that it is the very right price that they get from the process. And they are used to selling their portfolios with very high and aggressive competition. So they would look for the same structures while they are selling their portfolios. And there are already 18 different companies within the sector. As I said before, I don't see the solution in establishing a new bad bank. I do see the solution in opening up the market to the international investors. So a bad bank without the structural changes that we are proposing are implemented will not change anything actually. And if we can implement as a country the structural changes that we have proposed and what the international investors are looking for, then the problem will be solved anyway with private investment. So I see the best solution in private investment, in healthy competition, and in fair pricing.
So speaking of investment, I'm turning to Walter to see if he agrees with you on this bad bank idea. Walter, I'm sure you must have seen the bad bank implementations in various jurisdictions. Turkey is not one of them yet, and most probably will not be. Do you see any urgent need in this market for such a bank organization?
I think if we look at Europe and the various forms, they are very interesting examples, some better, some less fortunate for these sort of publicly driven workout structures all over the place, and everybody can take a look at themselves what the differences are. But certainly, if you implement such a bad bank, I think the lesson is that the design of that is also a very critical and difficult issue. But I would agree. The issue is for Turkey is not who should manage the workout process. I mean, there are AMCs in place, there are markets in place, there are capabilities in place. The issues are really is unlocking the structural impediments that get international capital into the market and closing the pricing gaps. These are the two things that in any case, bad bank or no bad bank, will need to be solved. So, I think focus should be there, and I agree with Sezin's comments on that issue.
I see. Well, all right. And Ksenia, how about your views?
I think I would definitely agree with Walter and Sezin. I think whilst obviously there are examples of successful bad banks in other jurisdictions, I think that the key question here is who would ultimately be bearing those losses. And I think Sezin alluded to this earlier in terms of unless there is a strong push by the government and therefore the willingness to take up those losses, I think that the urgency point is better resolved potentially through a market solution. I think the other challenges that Walter's alluded to, and I think it's one of the reasons why the discussion's been going on for so long in the Turkish context, including, for instance, things like ownership or governance or transfer pricing, as well as the servicing, can prove to be insurmountable, especially if you take into account that obviously the Turkish banking sector is a mixture of private and state banks, which only adds complexity to the creation of such an entity. I think from an EBRD's perspective, we kind of have always remained open to any number of solutions. However, whilst we obviously see the urgency in the legislative and regulatory changes that we've discussed earlier, it doesn't have to necessarily come in the form of a single entity, in the form of a bad bank. And I agree with Sezin personally that I think a market solution would be a much better one to ensure that the external investors are able to come in.
I think, well, so I guess the message from the three of you would be instead of routing through a bad bank, we should be unlocking the potential of our own AMCs by doing the legal reform, the structural reform, and allowing international investors to invest in these entities which have almost 20 years of experience dealing with Turkish NPLs. So, John, how do you see it from Greece? Was it fruitful, or you agree with the idea that we should leave this to the market to explore?
Yeah, as you know, I covered Greece over the last 4 years, and right now it's a hot topic, yeah, for the NPL industry. You all know, based on financial media, about the Bank of Greece, initiative for a bad bank, which is targets in full to streamline the bank balances, relieving not only the bad loans due to the long financial crisis in Greece, but also the non-performing credit from the coronavirus crisis, which is expected to be up to 10 billion. I'm more than happy to share, what is the plan, and you can take it as a lesson learned. I cannot comment if it's good or nothing for Turkey. So they plan to establish, an asset management company with a cooperation of the public and private sector. The company's initial share will be low, aimed at covering, the immediate operating requirements for staff and material infrastructure. And lenders will be able to transfer the non-performing loans in their financial accounts to the bank on a volunteer basis. Depending on the strategy for each bank, the transfer of bad loans may take place, gradually. Based on international exposure right now, in order for such a scheme to be successful, it should be neither too small nor too big. So therefore, the Central Bank of Greece estimates the sum of loans transferred to be around 45 billion euros. And the transfer of loans will take place according to the accounting value banks have calculated for them in their books. And the bank then will try to transfer them, to sell them to international investors, including the state collateral. This is the process. If it's going to work or not, I cannot comment, but at least this is a hot topic, and this is something we're going to expect in Greece over the next few months in the NPL sector. That's all from my side.
Thank you, John. Well, as the last point of our discussion today, I would like to discuss how technology can help the development of Turkish NPL market. Obviously, we wouldn't be having a complete discussion without touching upon the technological aspects of this matter. I believe at the end of the day, COVID-19 forced us to have our meetings, have our due diligence exercises, have our negotiations on the virtual ground. So we will definitely need technology. And as a lawyer who is maybe following up with the technology not as fast as he should, I would like to turn to John on this point. John, basically, you are a major, DataSite is a major technology solutions provider for transactions in the corporate finance world. From M&As to IPOs, personally, I have made use of your facilities in many transactions I advise on. Do you think you can also play a role in the Turkish NPL sales market as well? Because at the end, as far as I see, you play a major role in almost all Turkish cross-border transactions. So maybe bringing this experience into the NPL facilities would be helpful for all parties involved, including sellers, including buyers, AMCs, including advisors, investors, everyone. And of course, otherwise, without the pandemic, without the vaccination, we won't be able to, get out of our homes to, meet each other, discuss with each other, review all those piles of dossiers that belong to the loan facilities, that belong to securities, etc. So, how do you think technology can help us?
Thank you, Muhsin. First of all, let me clarify that most of the financial institutions in Portugal, in Spain, in Italy, in Ireland, in Greece, they are fully utilizing the VDR capabilities of DataSite. We all know about the VDR. We all talk about technology itself. But I would like to share with you and the audience what we are facing here. An NPL project has very, very specific and unique characteristics. They can be very, very demanding and big in size, right, in relation to documents to be shared with or to be uploaded in the platform. I'm talking about hundreds of thousands of pages. And at the end of the day, you can very, very easily imagine that the bank is selling a portfolio of bad loans. So any bank will have thousands of positions, and each will have supporting documents. So this process has been run through financial advisor, through the banks, if they are selling the portfolio as a previous part to the selling of the bank itself, in order to clean the balance sheet. So you understand that there are so many players. You don't have unlimited resources. So I truly believe that how you collaborate, how you take the data tape, how you take, all the documents, the collateralized documents for each position in a very short period of time, because based on the volatility of the markets, you have to conclude the due diligence process in 3 months. But guess what? You need to prepare yourself 6 months in advance. How you are going to do that with all these players? How you are going to bring the rating agencies into that process, who are like EBRD, that's a great example as well, to review all these documents. So it's a very, very challenging process. And I want to clarify that we are talking about the most demanding and challenging projects. We do that over almost every day for any NPL in Greece, to be honest, or in Italy or in Spain. There are 3 characteristics, and that's going to be my high level insight here. The first of all is the insight. It's really important, to get analytics in order to know the investor's appetite. You are going out there, you are setting, all this, you bringing the investors, you need to get some insight about who is reviewing your documents. You need to care about the security. We have right now GDPR, and in Turkey, we have the Turkish data privacy law, right? And when we are talking about all these positions, think about it. It's like myself, that I own 100K in a bank, right? You have my personal data there. Based on GDPR, even though you are using a very secure system, you cannot share or exchange the personal identifiable data. So we even include right now reduction, which is the black lining of sensitive corporate data. So I think this is very, very unique. Time is one thing, speed is another thing. Insight on the investor's appetite is extremely important. Security is extremely, extremely important. And again, I highlight, because I see that almost every day in my working life, about the integrated reduction, the black lining of sensitive corporate data based on the regulation, which, by the way, they drive the NPL transactions. So I think technology can help a lot, and we will see, I hope to see many organized NPL sales processes in Turkey as well, as we see in all other countries all over the EMEA.
Well, I'm smiling, but I'm smiling in sorrow because you said at one point hundreds of thousands of documents to be reviewed. And that took me to my days as a junior associate, being the one that was reviewing all those documents. I still remember those days, and it's not a real nice feeling, I would say. Thank you, John. Quite insightful. Sezin Hanım, I remember in one of our previous conversations with you, you emphasizing the importance of standardization of data when it comes to review of these hundreds of thousands of pages of NPL files together. How do you handle this? Is technology helping you as much as you expected to?
There is no standard solution in Turkey now. All the banks have their own digital data rooms. We access those digital data rooms in order to get the data from them. In case of, for the case files, they scan everything, they put it online, and we go through them, we ask our questions online, we receive our answers and the documents online. However, there is still a lack of comprehensive data and comprehensive case files. In most of the cases, we are in need of going to the bailiff to see the actual original case file, go through the documents, and then come back and review them. This actually can be achieved. I mean, I am sure that most of the banks don't have the scanned copies of their whole case files either. If they had, they would have put it in the digital data room. Actually, we are in talks with Minister of Justice about this. There is a national digital legal system which holds all these data. If you own that, if you are the lender of that file, then you can see the file online actually. And we need to be given access to these files. In addition, there are GDPR issues, as John has just mentioned. So which information can be given to AMCs and which information cannot be given. We have a proposal in this part as well. We have defined the whole set of data that's required for a healthy sales process of a portfolio, a retail portfolio, a corporate portfolio, an SME portfolio. And we are suggesting that if both parties are regulated by BRSA, the bank and the AMC, and if we are all signing a confidentiality agreement, then we should receive the identification information of the customers as well. We will see how it ends up because there are different approaches right now. Some banks do share all the information of the customers. Some banks don't share. So there's no standardization. It's very important to standardize these things so that all investors access to the same information. It's a healthy process and we can find the right price for the portfolio. And when we look at the auction process as well, there used to be several banks until 2019 which were making their sales online auctions, but most of them was physical auctions. This year, only online auctions took place, obviously. All the banks that were making it physical, they are also using online auction systems. It's third-party systems. However, we hear from some banks that they would like to go back to physical auction process once the pandemic ends. They would like to see the bidding process. They would like to see an eye-to-eye bidding process. That's how the acquisition process works. On the technology side, you know, we have invested in our technologies since the beginning. Most of the companies have their own in-house systems, in-house valuation processes, in-house customer management systems, in-house legal management systems. It's an important part of our know-how, and we would like to advance it further with, of course, globally implemented systems.
Well, I agree that Turkey is ahead of most of the European countries in terms of digitization of financial services. Turkish financial institutions, including AMCs, have very strong digital systems, in-house systems, and designed in-house or designed only for the financial institution itself. 2 points for which I can make a contribution here. Well, you said there is this national judiciary system to which the lenders have access, obviously. And for you to be able to review the lender files therein, your lawyer needs to be authorized by the lender through a power of attorney or some similar authorization. This is where, you know, I think the bottleneck occurs, because at the end the lender wouldn't be providing this power of attorney to your lawyer.
Just one comment to add there. It's a long process. Unfortunately, we don't have the time schedule that John has just mentioned. He said that it takes 3 months to value a portfolio. If it's a corporate portfolio or an SME portfolio, whatever it is, the maximum time that's given to us is 3 weeks. So we have to finish everything, working everything, finding the right price within 3 weeks. We made a proposal about this, about minimum time that can be given to evaluate a portfolio, but we couldn't propose 3 months because it's unacceptable to Turkish banks at this point in time.
Well, you know,
Sorry,
things are quite.
Sorry to interrupt. Are you referring to 3 weeks for the valuation mechanism, right? Not for the wholesale process.
From the time that you are given the data until the time that you have to make a bid about that portfolio.
3 weeks.
A binding
Maximum.
bid, I might add.
Binding letter, maximum time period. And the banks are proud of
Turkish people are really impatient.
And how much time do you need to prepare the whole process, if I may ask?
Most of the time 1 month at max, because you are informed of the deal. Let's say the first week you have a process of signing confidentiality and other agreements. That takes generally 1 week to 10 days. And at the end of that period, you are given the data. If it's a retail portfolio, it can be as short as 1 week.
Okay.
If it's a corporate portfolio, if you have to go through the files, then it can be extended up to 3 weeks.
Great, great. Thank you.
Well, obviously 3 weeks is crazy, but I think no one can blame them, because at the end 3 weeks is like long term in Turkey. Everything changes on a day-to-day basis. We all have sudden surprises. We all have major economic, legal, etc. changes from day to day. So this is Turkey. So you need to act fast, and at the end, impatience, I think, is one of the marks of our culture here. One more thing that I can contribute at this point is you said there is a problem with regard to share of personal information that might be contained in the NPL files that you need to review. One point that, well, of course, there needs to be a legal change about this to obviously facilitate things for the AMCs so that they can review all those major files in 3 weeks' time. But one legal point that is already there is pursuant to our Code of Obligations, which basically regulates the assignment of receivables, which is the legal grant of NPL sales. The assignor needs to provide all the documents that are underlying the to be assigned receivables to the assignee. And this, of course, includes the contractual arrangements from which the to be assigned receivables are arising, invoices, agreements, etc. And I think this is a major exception that you can rely on when you ask the bank to procure information, including personal data of third parties contained in the information to be provided to you. Sezin, one last question for you. You talked about a couple of problems in terms of data quality here. Do these problems equally apply to corporate NPLs and consumer NPLs? Do you see the data provided for corporate NPLs being much better quality than consumer loan type transactions?
Just the contrary.
Oh, really?
Consumer has been, I mean, it has started in 2012, actually. 2018 to 2012 was corporate and SME period. And then after 2012, banks started selling consumer in mass. And actually, it has evolved and came to a level that consumer data is very good, very detailed. We can really work on it, and we know what to expect from each and every bank. And they have established processes. They produce the data, and they know how to produce the data. Their IT systems, IT teams worked on it. When we come to the corporate side, there are no established procedures. There are no established processes in place yet within the banks. So it's like each and every portfolio that's being offered is a niche case. They work on it. They try to manage it. And from each and every bank, in every case, there is a different set of data coming. There's a different set of scanned copies of case files coming. So it's not an established process yet. We need to have enough quantities of sales so that process is an established process. They know what to provide. Currently, it's a very weak data, let me say. Most of it is answers to our questions. We ask a lot of questions and we try to get further information from the bank.
Well,
you need to be
know,
experienced and you need to know what you have to look for in cases, and you have to ask the right questions.
I see. Well, that's a tough job. You know, as a lawyer who has dealt with due diligence for years, asking questions to Turkish corporates, trying to consolidate the answers and achieve a meaningful legal conclusion. I understand your pain there, so it must be tough. Well, thank you, Sezin. Thank you, all of you. It has been a very fruitful discussion. Although we have been a bit pessimistic about the changes that are really required to take this market ahead. At the end, it's always good to share ideas because at the end we need to achieve a goal, which is, you know, an sanely operating market, especially on the corporate NPL side, so that this restructuring and NPL wave can be dealt with and we can look ahead. So again, as I said, thank you very much for this. I would like to thank my esteemed panelists who brought their NPL insights to this very efficient discussion. I hope next year we will be sitting in a conference room face to face, having left behind the pandemic, celebrating maybe the early days of the developed Turkish NPL market, and sharing our recent experience working on major Turkish NPL deals. And until then, I would say please stay safe.